9:05. I'm going to start recording and we'll go ahead and get started. So just as you, for anyone that hasn't already been in a call with us, we start with our analysis on the DXY. The reason being it's a base currency for global trade. It's really the only currency that matters. All other currencies will fall in suit in respective to what the DXY does. Granted, news events will come out for other currencies that will affect it, but the main thing that matters is the DXY. So we start our week by really looking at the DXY and what it's doing so we can build our bias towards the rest of our pairs based off of what the DXY is doing. If you guys paid attention last week, the interest rates got raised another 50 basis points. So, that creates a lot of bullish momentum for the dollar because the US dollar is now harder to access. It's more expensive to access the US dollar. And because of that, it actually causes it to go higher and increase in value. So that being said, if you look here at the dollar itself, we've been trending down on the daily, making lower lows, but our volume has been steadily making higher lows. And then if you use the TDI, you can see here all of our bands are under the 50. So we may see another pullback because we've got our alpha trend, we've got our mini trend, we've broken our mini trend. So we may see a little bit of a pullback here with the RSI to come back down and test the midline of our channel, which would also test the outside of our trend line zone here and possibly even make a lower low, creating even more divergence before we start to see that big push up. Price did break our support level and it's never retested it. And it's been a long time since price has retested our alpha trend. So with the interest rates being raised and our just generalized technical analysis, this thing is primed and ready to start making its push up. Again, we may see that push down, but overall, that's what we're looking at for the US dollar. And again, this is on the daily. This may take 2 or 3 weeks to play out. So we're just going to give it plenty of time for it to play out. So again, if we're bullish on the dollar, we're going to be bullish on any pair that has USD in the front, and we're going to be bearish on any pair that has USD at the end. So for pairs like UJ, it's setting up in a very similar fashion. We broke our support level. We've never really retested it. We also broke our overall alpha trend line for this last huge move up. We've never retested the underside of it really. So price needs to come back and retest our level here. Price has made a low, lower low, lower low, and the whole time we've got divergence in our TDI. The same thing with our TDI bands here. Our whole entire channel is just about under the 50, so we may see another push down here, find some support again, confirming that that's going to hold, and then we'll get our bullish push up. Again, that just kind of confirms what we're looking at for any pair that has USD at the beginning. If we're bullish on the DXY, we're going to be bullish on any pair that has USD at the front. Now we move to Euro USD. Euro USD has been trending up pretty well. We had a lot of divergence down here. We started to get our breakout out of that trend. We also cleared our previous highs and retested them, which is really good for us to maintain our bullish momentum. However, we've got a little bit of structure here. For those of you that know this pattern, that's great. For anyone that doesn't, this is called a rising wedge, where our highs are not, our higher highs are not as significant as our higher lows. So we're making much steeper higher lows than we are making higher highs. So this is a really great reversal pattern. We've actually already broken outside of our trend line for the short. And the same way, if we go back and look at the DXY, it's been a long time since we've retested our alpha trend. So we're long overdue for a retest on our alpha trend. Same exact thing here. We've got our alpha trend that just began. It's been a long time since down here that we've actually gotten our retest. And as you can see here, price is trending well above the 50 moving average. And, there's already 3 confluent events happening right here. once price does reach this level and we confirm that we're going to hold this as support, we're going to be able to take some really beautiful buys right here. We've got our 50 moving average. And moving averages, if you don't already know, they're dynamic forms of support and resistance, right? They're not necessarily linear like a support or resistance zone. They're dynamic, so they're constantly moving. So it's no coincidence that where our previous highs are that we broke, that we need to come back down and retest again, is also lining up with our trend line channel. And on top of that, it's going to also line up with our 50 moving average. So when price does reach this point, which we'll look for sell entries to get that trade coming back down, because I think that's like 250, 300 pips, something. Yeah, somewhere in there, like 250 to 300 pips for that move to happen. So we're definitely going to be looking for some shorts. And then once we get in this area, it may take a few days. It may even be after the first of the year. But when this plays out, I guarantee that's a 50 retracement too, once it gets to that level. Yep. So yeah, I mean, we're looking at a really nice trade setup here. It may take a week or two. Oh shit, wrong one. It may take a week or two for us to get price to set up enough for us to get in there, but a good 3.5 risk to reward ratio set up there for almost 500 pips, and realistically it's going to set even higher highs, so we could target more, but safe take profit right in there. So we'll have the short on the way down. Once we confirm support, then we'll have our buy up. But USD is the second currency in this pair. So if we're bullish on the DXY, we're going to be bearish on any pair that has USD at the end of it. So that just adds another form of confluence here. So we've got our rising wedge pattern. We've got a lot of divergence in here. Price is going to, at some point, start its way, making its way back down here to retest all of our structure right here. So that's what we're looking at for the euro dollar. For euro Aussie, we called this one not last week, but the week prior. It finally hit take profit on Thursday, which was a 349 pip trade. It took a little while, but that's just how some of the trade setups are, especially when you're marking up the higher time frame. The reason we took both of these trades actually is we had our bullish flag. Price had been trending down for a very, very long time, and then we had our recent significant highs broken with a lot of momentum. So typically anytime you get a trend change, in other words, you get a break of your trend line and a break of your previous significant highs, you have a true trend change. Anytime that occurs and you get a bull flag, this is a really badass setup right here. Anytime you get a bull flag right after a trend change and your break of structure from your previous highs, which some of you may know as choches, this is an awesome setup. And we took our take profit conservative. We only targeted 349 pips. The way you actually trade bull flags is you look at the previous leg here, your flagpole. So we measure from the break of our previous structure to the bottom of our channel, which was 610 pips. So we got out of that earlier. This may come back down and retest this area right here, which will give us some nice entries to take that buy and milk it for another 200, 250 pips. So there's no US dollar in this pair, so there's no way to correlate it using the DXY. So we're just going to have to wait and see what happens there and wait for price to form some structure. But I could easily see us taking a really nice long position somewhere in this zone once it gets to that point, and we'll be able to milk that trade again, trading that setup 3 times in a row, which is beautiful. Easy money right there. Then we've got GU. Again, USD is the pair at the end, or the currency at the end of this pair. So if we're bullish on the DXY, we're going to be bearish on USD. And you guys are going to hear me say that over and over and over and over again. If you're not using the DXY for correlation to your trade setups, you're doing yourself a disservice. So same situation here. We've got our trend line channel. It has not been retested since we were back here, the same way that the Euro USD has not been. tested since way back here. It's, you know, kind of crazy. You guys are going to start seeing the patterns here, how all these pairs correlate, and how everything in the market is cyclical. So we're waiting for our, actually, I think we'll be right in there. Waiting for our pullback here. The zone is really wide, if we're going to include that wick. So price isn't going to just come right here. I could easily see it coming all the way to the bottom of our channel before it starts climbing its way out. But we don't have any divergence, but our TDI channel is up above the 50. The entire channel, all of the bands are above our 50, which anytime that happens, is a really good indication that we're going to see a really big move down with a shark fin for the buy. So just like for the Euro USD, we're going to be able to catch the short for a price to come back here. When that happens, we're going to get a shark fin and some continuation divergence off of our trend line for a buy. The same exact thing will happen for GBP USD. So we're going to get a really big push down. We're going to get a shark fin with some continuation divergence from here to wherever it touches in here. Because if you look here at the previous time that prices really tested inside this channel here, look how high our RSI and the TDI is. And look how close current prices is with the RSI and the TDI to that previous low. So if price pushes all the way back down here and retests and confirms support in this area, our RSI and the TDI is going to be somewhere down in this area. So we're going to have, you know, price is going to make a higher low, but volume is going to make a lower low. So we're going to have continuation divergence. So we're going to take the short, make money on the way down, and then we'll also be able to have some really great opportunities to take the trade going long for some crazy amount of pips. So again, correlating to the US dollar is bullish. So we should see a nice retracement here for GBP USD. Then we'll move to US 30. Everyone loves US 30. It's my bread and butter, the best pair on the planet to trade if you've got the capital to take the losses and properly leverage. So Jamal and I actually called this to the T last week. What were we looking at? Was that the weekly, Jamal?
Yeah, it was the weekly. I was actually going to tell you to take a look at GU on the weekly because it's set up the same way the previous week was.
Oh, yeah,
like US 30's previous week.
Yeah,
See how it's rejecting those weekly, the previous weekly highs.
Yep. Yeah. If we zoom out even more, if you guys look at our previous significant high, here is the high on our volume, but look how much higher the volume is on this high, and we've got a shark fin. So, I mean, this thing is screaming sell. If we just look at
right off of your moving average as well.
Right off the 50. I mean, this is going to be a fucking sweet trade. Granted, we're not going to just jump in right now. We're going to wait for some confirmations, but this thing is looking too nice right now. All right, so we've got a high, and then we trended down. We pulled back. This is our previous significant high, and I bet that's a 786 retracement too. Almost got money on it. Yeah, right at it. So a lot of people would argue, well, we had a candle close above it, blah, blah, blah. But, you know, we had this this candle here, the hanging man, and then the very next candle closed right back beneath it. Price is currently retesting right on the underside of the 786 right here. Yeah, this thing is primed to go short right now. Anyway, so we've got our previous significant high. We've got a lower high, right? Everyone could agree that this high is lower than this high, right? So volume should also correlate to our price. Anytime it doesn't, that's manipulation, and you know, we've got divergence here. So volume made a high, but a much higher high with a shark fin. So in theory, this thing should come all the way back down to our zero line, which would actually make a lower low before we start seeing any climb out, which, you know, that's almost a 1800 pip trade right there. So this is looking so freaking nice for the short. And again, if we're long on the dollar, we're going to be short on any pair that has USD at the end of it. So GBP USD, we're going to have a short bias to. And again, we're on the weekly chart. This is going to take a long time to play out. So we're not going to just jump in the trade right now. We're going to wait for some confirmations, and we'll take a bunch of trades on this move down. So we're just going to be patient and wait for opportunities to actually get in the trade. Moving back to US 30, previously, this is the previous weekly candle. This is the current weekly candle. So we're going to pretend that all of this right here was not even here, because when we looked at the chart last week, it wasn't. None of this was here. Only this candle was, right? And Jamal and I called it to the T. We said that price would push up and there would be a liquidation of it, because everyone knows that this is going to go short, and everyone's going to set their stop losses like somewhere within this zone. And as you can see, they literally drove price way up, just a nasty little wick. We call this a fuck you wick. And they pushed price all the way up, liquidated everybody, and then the weekly candle closed all the way back down here. So also, if we zoom out a lot, we've been trending down. A lot of people would argue, oh, we broke our trend line and price is going to go long. Well, I've traded US 30 for a really long time. And just because price broke this trend line doesn't really mean anything. I could easily see them pulling this right back under here, retesting the underside of this, and make even lower lows.
Again, a true trend change needs to break that previous high.
Yep, this is going to be our previous major structure right here, which it wicked right off of. It didn't even break, it just wicked it and turned right around in a major way. And we've got that, we're already starting to get an engulfing series. This engulfing candle engulfed the last 3 weekly candles. So we've got a nice engulfing series on our hands. And if there is a lot of bullish momentum with the dollar after those interest rate changes, we're going to see a lot of bullish or a bearish momentum for US 30. And for anyone that doesn't already know, you correlate the DXY to your asset classes like US 30, NASDAQ 100, SPX 500, Bitcoin, any of your cryptos, oil, all of those. It's whatever that asset class is versus the US dollar. So US 30 versus US dollar. So it's just like GBP USD. If we're long on the dollar, we're going to be short on the indices. If we're long on the dollar, we're going to be short on things like Bitcoin. So, we got to take that into consideration. And, a lot of people are going to argue that, price just broke trend and it's doing its retest and it's going to go long, which it may very well. But I've seen, US 30 is one of the most manipulated pairs you could possibly trade. And it would be no surprise at all if they got everybody in the buys right here on this zone, and then they just sent a candle all the way down. It would be no surprise at all if they did that. So just be cautious of that. Anyone trading US 30, just under leverage, especially this week. Like we said at the beginning of the call, we expect Monday, Tuesday, maybe Wednesday to be fairly normal. And then we should start seeing a lot of action die off towards the end of the week for the holidays. And then next week, we will probably assume that it's going to be pretty slow as well, with the New Year's holiday coming up. And then after that, I think they're going to just pick back up to normal and put in the work. Typically January, February, they're pretty slow. December especially, as you guys have seen, December has not been slow at all. Usually December is one of the months with the smallest amount of volatility, but this December compared to last December is unreal. I mean, it's been insane this month. Like if we go look at the daily, what is this, the 18th? So if we go back 18 days from today, right here, that's a good amount of movement right there already. And there's no telling what is still left in store for December. So I think January and February, we're going to see that continued momentum that we don't normally experience during the winter trading season. So I'm excited for it. Any questions you guys have, please take yourself off mute, ask your questions. If you don't want to take yourself off mute, just throw them in the chat. Again, the whole purpose of this call is for you to use Jamal and I as a resource to help you become a better trader. So any questions you have, it's our job and our duty to help answer those for you so that you have the best information for you to be able to start achieving success while you trade. So any questions you guys have, just ask away. I'll leave the floor open for a couple minutes and let anyone ask questions if you've got them.
I've got one. This is TJ.
Okay, what's going on, TJ?
And just laying up in bed before I'm gonna go to sleep. You had to tap in with y'all.
Hell yeah.
So let's talk about fundamentals, and adding that into your analysis.
Uh-huh.
You know, there's the basics of, oh, the CPI is this, then it would mean this. If it's that, it would mean that. You know, like just like the basic theory behind a lot of different fundamentals. But I've noticed like definitely this year, it's been a bit wishy-washy, like the thesis behind any news event, any big event on the calendar, you know,
Yep.
it doesn't exactly happen how it would be expected to happen. And what is your approach to looking at that and kind of dissecting that and looking at it and like going, okay, you know what, this might be a time where it's not going to happen how they think it's going to happen if this news happens. Like it's going to be opposite of what everyone else would expect. It's like with the CPI news, like I can't even think of an example. It's late. I'd have to go through the calendar and find a specific one, but like it's definitely been wishy-washy on the expectations, not just on like the news release itself, but like, if it's higher than this percentage, then this is going to happen. If it's lower than this percentage, this is going to happen.
Yeah.
And the expectancy of that has been wishy-washy. So how do you approach?
So I'll start by saying I am not a fundamental trader. I use fundamental analysis to aid in my technical analysis, but by no means do I just trade fundamentals like some people that are fundamental traders. So I first want to point that out. The second thing is here with fundamentals, you know, there's a shitload of news every single week. I mean, just this week alone, I mean, there's a crazy amount of news, right? So the only news I look at is with anything with the US dollar. The rest of them I don't really care about. Yes, some of those news events for the other currency pairs will affect the market and you will see some crazy moves. But again, to me, in my eyes, the only currency that matters is the US dollar because it's the base currency for global trade, right? So anything that comes out about it is going to be a major deal. So anything with the US dollar is what I'm going to be paying attention to. And like you said, it has been wishy-washy and you got to think about it. There's always an enemy at hand. When you're trading in the Forex market, when you're participating in the market, for you to make money, someone has to lose money. So who has to lose money, right? That's going to be all of your large financial institutions that are moving money around in the market. So they use news events for liquidation events. That's the whole, it's not the whole purpose of the news events, but it's just an excuse. So anytime news drops and, you know, maybe it says the actual results were higher than expected, which should cause some bullish momentum for the US dollar. But because it was higher, it freaked people out. So it caused some bearish momentum temporarily. So instead of the market shooting up like crazy, like you expected it to, it makes a really violent push down and then retraces 100% and then goes, you know, long for a while. So you really have to break it down to what it is, right? So last week for the interest rate decision, what I was looking and waiting for was if it was going to be over or under or right at it. If they came out under, it doesn't matter how much more the interest rates came out above what they currently were. Any increase in the interest rate is going to make it harder to access the US dollar. So that's going to add bullish momentum to the US dollar. You know, if they expected to raise it 50 basis points and they raised it 75 basis points, at that point, you know, that's really scary. That's going to scare the market. So at that point, you know, people are going to, you know, fear sell and do things like that. And it's going to probably cause a short temporary spike down before it actually goes long and makes the push that everyone expected it to. So, you know, don't ever just take a trade because a news event comes out, but just use that to aid your technical analysis. And for like let's just go back and look at it. It's just a lot easier to do if we go back and look at the charts. How do I look at last week? Is there a way to look at last week on here? This week, tomorrow, today, yesterday. Aha, okay, cool. So yeah, let's do, what was last week? That started on the 11th, and I think think interest rate came out what, Thursday, Wednesday, Thursday, I can't remember. Employment.
So while you're looking for that,
Oh, you hear this?
uh,
So what day was that? Go ahead. You can actually.
a lot of times too, like let's say the news releases at 9:30, like you don't even really have time for, okay, cool, the news dropped, look at it, analyze it. Okay, that means this. By the time you use the charts, like especially if you're trading indices, like you've already, like it's already probably boomed either direction like 3 wicks.
Yeah.
So for
So,
me, I feel that I'm weak on my fundamentals, which is why I've been kind of looking into them a little bit lately, over the past few months. But what I've done so far in the past is just understanding, okay, there's a news event at 9:30, and then I'm fully technical with my technicals, just understanding that there could be a big move at this point in time. So I'm more lenient with my TP, not with my stop loss, and that's what I've been doing. Because there's not really a time gap for you to really, by the time you analyze that news, like the move, it happened. Like the minute that candle opens, boom.
yeah.
Hey, did y'all? I hate to bother you. Did y'all notice the move started way before the news released? They was talking about that
The
they
last
released.
yeah.
Yeah, they said somebody leaked what was coming out. Everybody jumped on it.
Yep. And that will happen from time to time. Anytime that happens, because the market is moved by human psychology, right? Even if it's a EA trading, proprietary funds, and there's, $5 billion in that account that the EA is trading, a human still built that EA, right? So the reason a candle goes up is because people buy. The reason the candle goes down is because people sell. So anytime news gets leaked like that, people know what that is going to do to the market. So they go ahead and start doing, whatever they assume that it's going to do, which causes price to do that. So, that's a very, very, very rare occurrence that information will get leaked like that. But when it does, there's no reason to even trade it at that point, because you're going to be so late to the game, unless you're really on your fundamental shit and you got access to that information before it even dropped. So what I want to do is I want to show you, because I know, TJ, you were asking, how do you participate in the market by making your analysis off of the news? And I'm going to show you how simple it actually is off the 5-minute chart. So here's when the news got released for the interest rate decision, right? So the interest rate decision, where is it? So the previous was 4. The consensus was another 50 basis points. The actual was 50 basis points. It doesn't matter if this came out as 4.3 or 4.1 or 4.7. No matter what this came out, if it was above 4, the dollar's bullish, period. You just have to understand, like, I don't look at a bunch of different news events, all these green and orange ones, I don't give a shit about. And most of the red ones for USD, I don't really care about. The only ones that I trade or care about to trade, or I think that matter a whole lot, is going to be FOMC and interest rate decisions. So those are the only ones I find any value in. That aren't as wishy-washy. So because this number, regardless of what it would have came out as, if it's above 4, we're going to see a lot of bullish momentum in the dollar. And as you can see, right out the gate, in 5 minutes, we had that crazy massive push up, and then a little bit of consolidation, and then another push back up. And that was just the immediate position. Most of the time, news, when it drops, unless it's something crazy, it's not just going to go crazy, straight to the moon. We got that bullish momentum. We cleared all of our previous highs. We came back here one last time to create a little bit lower of a low with some divergence, bounce support off of the structure over here, and then we started climbing our way out of it, right? And we've been trending up ever since that news event happened. So if we go look at the same area of our chart, which is the 14th, let's go look at like USD JPY, right? So if we were bullish on the dollar, what do you think we would have been biased on USD JPY? What was our bias, bullish or bearish?
Bullish.
Bullish, right? So 1300. Awesome. Appreciate you, Jeremy. Take care. Kill it this week.
Hey, you're on the 15th.
Oh shit, that's why I'm like, this doesn't make sense. There it is. All right. Okay. Okay. So for this right here, right? So this is a 5-minute candle. We're going to go down a time frame. Shit. 16, 14. There we go. So you got to think about how long is it going to take you to refresh your browser tab and look what the percentage is, right? You shouldn't have to do any further analysis. You should have your mind made up. You know, if it's this, I'm going to do this. If it's this, I'm going to do this. You refresh, it says whatever the value is, and then you go execute, right? So you missed this whole entire candle. If it took you 60 whole seconds to refresh your tab and see what that number came out as, and then go back to your chart, you missed the first 60 seconds of that move. Again, that's just really overestimating. You're still able to catch, you know, that entire move, which if you only took it to like right here, right, that's 40 pips in 2 minutes. You know, be done for the day. 40 pips, you know, it's not 400, but it's 40 pips that you made in 2 minutes. Fuck it, be done for the day, right? You can, the same applies to any pair during that time. Let me just zoom out here, go back to 14th. So if we're bullish on the dollar, what are we for Euro USD?
Bearish.
Bearish, right? So say you missed that entire first 60 seconds of action and you got in on this candle in 2 minutes, 22 pips. If you would have held it, you know, put your stop loss, you know, wherever you put it at, or protected, whatever, you're going to get stopped out in profit. If you kept holding it, you know, almost 40 pips within half an hour. Again, great trade. You just can't be greedy, right? So there's no easy way to trade fundamentals. You have to understand what the news means for the currency the news is coming out. And I try to do what the opposite of the masses do. You know, I've called many trades out on Instagram for US 30 and Bitcoin because, you know, some news is going to come out and people are like, oh yeah, it's going to go long. It's going to go long. Everybody's bullish biased. What do you think the people that hold all the money in the market are going to do? They're going to go liquidate all those people. Yes, the market's going to go long. Everyone knows that. We're all looking at the same chart. You, the proprietary funds, the world banks, the large financial institutions that run the foreign exchange market, they all are looking at the same fucking chart. We can all tell it's going to go long. So they'll do liquidation events and they'll shoot candles down or wicks down, liquidate everybody, and then move it the way that we all knew it was going to move in the first place. So you know, there's no easy way to really trade that. So my recommendation is to either not trade the news, or if you're going to trade it, just really know your shit with what the news event is. And again, I would only trade those like CPI and FOMC and the interest rate decisions. Those are going to be the ones that, you know, give you moves like that, like the crazy moves. Let's look at US 30 at that time, because this is actually something we covered last week on our call. 15, 16. All right, so again, we're going to miss that entire first 60 seconds. It took us an entire minute to refresh our tab and see that the rates got published at 4.5, right? So we're going to miss that whole freaking move on that first candle. And we get in here in 5 minutes, you made 263 pips. If you kept holding it, you know, you made almost 500 pips in 30 minutes. So it's very possible. You just have to have your mind made up. You can't do your analysis after it gets released. You got to do your analysis prior, based off of what the results are. Then you go press buy or sell.
Yeah, on US 30 specifically that day, I was in before the news because I had already had my bias. I knew they were going to raise it regardless of what, if it was 4.1, 4.5, I knew it was going to be raised. So I was in like at the very, very top before the move even started. And again, I think it's just like Zach said, I'm not a fundamental trader either, but I think it's just really understanding what the news is going to do to the dollar. That's what's the most important about it. Like, because if you really know how it's going to affect the dollar, you can take you can be more aggressive with those entries. Go to the 5 minute, Zach, really quick.
Same area?
Yeah, same place. Because like what Zach said is you want to do what the opposite of the masses are doing, right? So zoom out a little bit so we can see like that whole day right in there. What a retail trader is going to do is a lot of retail traders, who, especially ones that don't understand fundamentals, they're buying right there because look at your structure. Stretch it some, or just let me share really quick. Actually, it might be a little quicker.
Go ahead.
Just so I'm not having to tell you every little thing, because I was actually looking at it myself. What a lot of retail traders would do. Let's say you don't know what's happening right here, right? You don't know any of this. Maybe you have some moving averages, you have your indicators or whatever, but here's what a lot of newer traders are going to do. And we were all new at one point. Okay. If I was a new trader, I'm looking at this, I'm thinking buy, right? We broke a lot of structure throughout our sessions, throughout Asia and London. Like you can have some sort of trend line up in here. You broke this high, you broke these highs, you had your moving average cross, you pull back and retested your MA, you have hidden divergence. I got a low with a higher low. I have a low with a lower low, right? So a lot of rookies, they're like buying up in here, right? Because they're just technical knowledge traders, okay? But when you understand how news and fundamentals affect the dollar, which is what's new to me, I just recently started really grasping that concept. I knew that the interest rate was going to be raised, which would be bullish for the dollar, which inevitably was going to be bearish for this. No matter if they wicked up and stopped some people out, it was going to be bearish. So I went on and made the assumption myself to sell really high. And yes, there were some other confluent events that I could have had, right? I got high, higher high, high, lower highs, right? But totally counter trend based on price. This is a counter trend trade. So yes, it could be very easy to be wrong in a traditional trading day. But when you're trading something, especially like the interest rate decision, like Zach was saying, you just kind of got to pick a side. And to his point, I think what he was showing you all, as far as if you miss that 60-second candle, the point is, oh shit, I hit the wrong button. The point is, oh shit, where was that? If you miss that 60-second candle, right? To his point, you can still make a shit ton of money, right? You can still make a shit ton of money from being 60 seconds or even 2 minutes late. But when it comes to things, when you have a confident bias of how the news is going to affect the dollar, don't be afraid to be a little more aggressive, because that is going to allow you to have tighter stops if you're going to trade with a stop loss in the news. I don't personally trade with stop losses in the news. I'm either just going to kill it if I think that I'm wrong. I don't even really trade news except for the same news events that Zach is referring to. Those are the only. I do look at non-farm payroll, but if there's a day where there's a lot of red folders, let me move this Zoom thing. If there's a day where there was a day last week actually where there was a ton of red folders. There was like 6 or 7 red folders in one day. I don't even really look to trade. I don't even care about the news that day. I'm not trading it because one red folder could be good for the dollar. One red folder could be bad for the dollar. This folder could be good for the dollar. These 2 folders could be bad for the dollar, right? So you're going to get a lot of indecision. You're going to see a lot of up and down, not really sure or clear what the story is trying to tell you with price, because you have so many news events, some of them being positive for the dollar, some of them being bearish for the dollar. Yep. So like Zach and I specifically like to look for days. We like to look for days where there's very few red folders. I mean, ideally, if there's just 1, 2 at the most, that's great, because it's only going to move the dollar whichever way that news event affects it. Again, when you have a lot of red folders affecting one currency pair coming out the same day, it's best to just avoid those days and rely on your technical analysis on the dollar, right? Look at a larger time frame. Look at a larger time frame on the dollar. Let the news kind of settle and see what the structure is telling you, and make your assumption of, okay, if the dollar is doing this, the news is getting it to retest a certain level or form some sort of pattern. And then you obviously are going to know what your other currency pairs are doing. But I say all that to say, don't be afraid. If you're trading with proper leverage, don't be afraid to be earlier to a trade if you're going to trade the news.
Yeah.
Personally, that's just my opinion. Because when I tried trading it, waiting for news to come out, I always ended up emotionally getting too attached to the trade. I'll show you really quick again. When you look at the 14th, the day that we had this news come out, right? The year and a half ago, I would wait for confirmation, right? I wanted to make sure I was right to the trade. And then still, even though I would win a trade, I'd be emotionally upset that I missed out on 400 pips. So then I'm over here entering in places where there's no sense in entering because I'm pissed that I didn't make as much money as I could have made, right? Like psychology is, obviously all of you guys understand, the psychology of trading is, that's the strongest enemy that you're ever going to face. Trading is just your mind. But for me, I've learned that I'd rather be in early, catch the whole move, because I know personally how my mental is. I'm going to be satisfied. Even if I don't have a huge lot on it, I'm going to be satisfied with the overall trade, how I analyzed it, how I executed it, and how I won that trade, regardless of how much I made. If I'm in early, and I'm okay to risk, with a stop loss up here. If I'm wrong, I'm wrong. But when I get in down here, for me mentally, I'm always pissed that I could have had all of this. And then I start breaking rules and I start doing dumb shit. So my advice, if you're going to trade news, I would limit it to just a few news events. Don't try to trade like every single news thing that you see, and have your bias before it releases so you can be ready to execute really quickly. Because I know a lot of people, not just myself, that not only get emotional when they lose, but they get emotional when they win and could have won more.
Yeah.
If that makes sense.
100%. And Gessner was asking what your stop loss was when you got in early.
I didn't have one because, again, I mean, for that particular day, I didn't have one because I just knew, again, like
full
I think
margin,
everyone
baby.
knew that they were going to raise the interest rates. I don't really think that was a secret. So, and knowing that, I knew that it had to go short. I actually ended up getting a second entry. What candle? So this is a 5 minute. If you're looking at it from a 1 minute, my entry was before the news released. And again, I did not have a stop loss. So I think I got in like 2 minutes before. I was in somewhere in here. It was once I saw the divergence on the 5 minute, I was really, really confident. But on the 1 minute, I want to say I was in like 2 minutes before. I didn't have a stop loss. And then once we got the real strong initial push and we got into this little consolidation area, is where I took a second entry. And then I had my stop loss for that second entry right above this high. And I had my first entry protected right above this high. And then I caught the rest of this down in here, and then I was out. And I think, all that ended up panning out in like 40 minutes. But my first entry, I didn't have a stop loss. Like if it would have screamed up 200 pips, I still wouldn't have lost too much because I was properly leveraged. I was actually under leveraged. And that's a term that, if you guys weren't on the call last week, Zach and I have said many a times, especially around the holidays, at this time of the year, and especially when it comes to high impact news, the best practice is to under leverage, not properly leverage. In any other scenario, you want to use proper leverage. But in scenarios like this, you rather under leverage. That way, if you lose, you can lose a lot bigger. You could risk a lot more in pips from a number standpoint. I could risk a lot more in pips to still lose a very small amount or a small percentage, depending on if you trade based on a monetary value that you're going to lose or a percentage that you're going to lose. But for me personally, I didn't have a stop loss on that trade. I know that sounds bad, but I think, again, it was just one of those ones that I think we were just so confident in that I didn't need one. Now, I can't say that would be the case for any news event that I would trade, but for this one particularly, Zach and I were just extremely confident in, what was going to happen.
Yeah, interest rate decisions are cut and dry. If it's for the US dollar. Other currency
right.
pairs, again, I don't care about. I'm, maybe a little biased, but I just understand that the US dollar, guys, understand it's the basis currency for global trade and commerce. The dollar is the only currency that matters on the planet right now. I think that's going to get replaced at some point, and that's going to cause a lot of problems. But for right now, the US dollar to me is the only currency that matters. So I'm going to pay a lot of attention to what the US dollar does. And for those of you that are already in our signals community, you guys know every single morning, the very first thing I do is I mark up and do my analysis on the dollar. And then I work down from there for the rest of my pairs based off of what I have marked up on the dollar. And, that's how last week we literally called only 5 trades, won 4 of them for a total profit of 409 pips. Like it's so easy if you just pay attention to the dollar. Thank you.
And one thing to add that's crazy about those stats from last week is none of those trades were US 30 calls. And typically we do call you. Typically we're going to call 2 to 3 trade setups a day during the New York session, and we will call trades using indices. But we definitely prefaced last week. We're prefacing it as well this week. We're not going to be trading heavy this week. We may not even call indices trades this week. It's just not the time of the year that Zach and I like to spend a lot of time on the charts. The beauty of trading, why many people get into it, is for the freedom that it provides. And around this time of the year, I want to be free. I have 2 little girls. I have a family. I want to spend time with them at this time of the year, not be on the charts 2 hours, 3 hours in the morning, trying to look for setups and forcing things just to provide a signal. So just want to put that out there. If we like something that we see, we will call it, but don't anticipate 2 to 3 a morning like you've seen in previous weeks.
Yeah.
But I think that's really dope last week. 5 trades over 400 pips, and not a single trade was called on an indice.
Right. And then, yes, Sunday at 9 p.m., Wednesday at 9 p.m., and then Fridays at 2 p.m. Yep. And that's the same every single week. We want to keep it the same. We're open to adjusting the times a little bit to work with more people's schedules, but whatever times it's set to, we're going to do it the same way every single week, just to make it really easy for everyone to be there and show up and get the most out of what we're offering here. So that's all I've got. If anyone has other questions, please take yourself off mute, ask away, or drop them in the chat. I'll watch your IG and try to catch. I'm just over Jackson to the west. Hell yeah, that's
yeah. I'm originally from Jackson. I had a 731 area code for over half my life.
Yeah, and then we're also going to do a giveaway. We're going to give somebody free access to our 4 ebooks. One of them specifically is, I honestly, I think it's worth all the money in the world. It's called The Power of Mindset, and it really goes into the psychological aspects of trading that no one really talks about. And the biggest thing that holds you guys back, or anyone back, or any new trader or experienced trader back from being really, truly profitable, is the psychological aspect of trading. Your own brain is what holds you back. Your ability to exercise discipline is what holds you back. Why do you keep making those same mistakes? Why do you keep over leveraging? Why do you trade on Sundays when you know you shouldn't be? It's like, you got to reinforce better habits so that you can be disciplined. And then the other, my other favorite one out of the 4-book series is the Risk It for the Biscuit, which is a deep dive into proper risk management. Everyone thinks risk management is setting a stop loss, and setting a stop loss is part of risk management, yes, but it's a very, very small piece of risk management. And the better you are at exercising proper risk management, you're going to get you're going to always protect your capital. And if you're taking your trade setups at 1% risk, it's going to take you 100 losing trades to blow your account. You have to be real special to be able to do that, to take 100 losing trades in a row. So what I want to do for the giveaway, if you guys just take a screenshot or a photo or screenshot of our Zoom meeting here and share that on your story, tag Candle Kings, myself and Jamal in it. The first person that does that is going to win access to all 4 of the ebooks. And then here in just a second, I'm going to drop a promo code for our signals room access, and then also our courses for anyone that's looking to further their education. All the stuff that we teach you guys, and you know, during the calls, all the stuff that we use to take signals, we break every single piece of that down in our courses. There is not another course on the planet like ours. Everyone does some screen recording on Zoom BS. You know, there is no comparison to what we've built for people. Literally, one of our members, he's actually the editor for all of my videos you guys see me post. He adds those captions on there. He lives in Ukraine and he doesn't even speak English. And he went through the courses and the ebooks, and granted, he's trading on demo right now, but he's doing a fucking awesome job and, you know, doing really, really well from a profit standpoint, just trading a demo. So, you know, it's like trading for dummies, so to speak. So I'll drop those here in just a second on my.
Looks like Brian, I think was first.
Brian was? Okay, hell yeah.
Yeah, I mean, I just got a notification.
Oh yeah, boom, done. All right, Brian, congratulations. Hell yeah, good shit, bro. So DM me, or actually here, just tell me what your email is, and I'll get all of those books over to you. Or yeah, it's in the chat. Cool, thank you, sir. Wait, where's the chat? There it is. Boom. All right. Look for an email from me here in the next little bit. I'll drop those to you. And then I'm going to drop a promo code here for the courses and the signals room access for anybody that wants them. There you go. Thanks, buddy. Psych. Yeah, 100%. Your brain is your worst enemy. Like the number one reason people quit trading. And here's the biggest takeaway I hope you guys leave from this call. Every single human on the planet Earth can learn how to trade Forex and make 6 figures doing it a year. No problem. It isn't rocket science. It isn't very difficult to do. The market's going to buy or the market's going to sell. The two things that destroy every trader's career is A, proper risk management, and B, impulse management. Your ability to manage impulse. Like, I'm not going to take a trade right now because there's no fucking reason for me to. There's no setup. There's no confluence. You know, most people are taking trades. And if I ask any of you guys, you know, why you took that trade, most people are gonna, you know, be deer in the headlights. Like, you know, I wanted to take the trade, or it looked good. Okay, why did it look good? Oh, well, you know, I thought it was gonna go long. Like, you don't have a real reason why you took that trade. So the faster you can really master the psychological aspects of things and be disciplined enough to use proper risk management, you're going to get there so much faster. I wish I had somebody like me telling me about all of that. I could have shaved off, you know, a year and a half of failure to be able to, you know, get to where I'm at now doing it. So, so we'll do, how are you feeling for the courses, Jamal? What do you want to do those at?
I'm indifferent. I don't care.
All right.
Hook them up.
All right. Hook them up, like 50% hook them up.
How about 35?
35%.
Let me see. What does that come out to? Hold on.
Yeah, we're already running a 41% discount right now. So another 35% off of there is going to be pretty nice.
So you want to make them to where they're stackable?
What do you mean?
Like they can use multiple coupons?
No, they'll be able to do the course bundle. I was just gonna put that on here. We'll let it use limit per coupon. We'll do this one for the next 5 people. Do it 1 and 1. So if you guys are interested in getting the bundle, we took off another 35% from it, and all you have to
Show
do
them a screen. Show them share your screen on Discord. Like, kind of scroll through the Discord, show them what channels are in there.
Oh, in channels, yeah. So for Discord, We've got all of our weekly announcements. We've got our weekly overview markups, which is where we'll post the screenshots from all of our markups that we've just done. So we can kind of watch those play out for the week. And then our signals and markup. This is where we call all of our signals and post those in here for you guys. Like Monday, we did UJ long for 31 pips at a 1-2 EA short we lost 9.4 pips on it. We got faked out, so we re-entered the trade right afterwards, bagged 22 pips on that one, 1-2. UJ for 318 pips for a 1-8, UJ 48 pips. So, you know, we called every single one of those trades in here for you guys with the exact entry, stop loss, take profits. If you guys literally take these trades, you know, just for last week, for example, we did 13% net gain, even with the loss on there. So, I mean, it's ridiculous what we are providing, and we're not some demo flexing guru like all these other people out here on Instagram. Like, we do the shit for real. We really make money trading. We trade live accounts. We take the same trades that we're calling for you guys. So we're down in the trenches with you. You know, if we call a bad signal and you lose, we also are losing. So it's to our best interest to call really good trade setups. We may call fewer trade setups, especially during times like this, but it's for everyone's betterment, because I don't want to risk my money and I don't want you to risk your money. So we're going to call really, really good trade setups. The numbers add up. I've done all of their trades to the T. They're not loafing. Yeah, for real. No loafing here. And then we've also have free signals that we API in from Carbon Capital. On Carbon Capital's website, it's got the free signals. So we API those in. Our Zoom calls where we post all the links, and then the recorded calls. And then our profits chats for people to, you know, call out profits that they're taking from the signals or trades that they're taking on their own. And then we made a traders chat for us to just like talk in here and bullshit, post markups, just talk about the market. And then a Q&A chat so people can prepare questions for our Friday call, so that we can really maximize the time we spend on our weekly recap and Q&A session on Friday's call. And then for the courses, we've got 3 courses. We're adding a 4th in there. The 3 courses are the Forex foundations. So that's, you know, the ground up basic terminology all the way through, you know, marking up charts, everything there. Even if you're an experienced trader, you feel like some incredible gems in this course. The advanced strategies, we cover over 20 strategies that we use on a regular basis. In this course, it has every single strategy that we use to call signals for you guys. So if you literally, you know, went through this course and really learned it, really mastered it, we're literally telling you all the secret sauce that we use to come in here and give you guys the same signals we're giving you that you could call for yourself. And then Indices Masterclass is exactly what it sounds like. We just go through and break down some really important key factors while trading indices, and things to take into consideration while you do it, and strategies that we use. And then Brian, these are the ebooks that you just won. So risk management, you know, let's talk about patterns, understanding divergence, and the power of mindset. These 2 books right here, they're worth their weight in gold. Like these books right here can really help accelerate somebody's success. So congratulations on winning that. Anyone have any other questions I could answer while we're on here? Again, I want to bring as much value as I possibly can to you guys while we're on these calls. You know, take yourself off mute, throw it in there. Promo code, yeah. So the promo code, I put it up there. Just put it in here again. All caps Zoom. So when you go through like the checkout process, like here, I'll just go on the bundle. We'll check out and apply coupon, and we'll put Zoom. Remove that. And just so you guys know, the course bundle comes with the courses and the ebooks. It comes and Signals Room access. So you got access to everything for the bundle. Apply coupon. Oh, I didn't put it in there. I'm retarded. Hold on. There we go. So the total $519, and that gets literally everything: lifetime access to the Signals community, all of the books, all of the courses. There's 3 courses now. Jamal and I are getting pretty close to finishing our the next course we're putting in there, which is going to be the Dixie correlation. So, you know, just a really deep dive on how we use the Dixie to correlate our trades for the rest of the pairs, because just from doing the calls that we've done with people that are in our community already, it's crazy that nobody does this. Like, no one uses the Dixie as their basis for all of the trades that they're going to do. So it's like crazy. So we want to make sure we do a course for that to help people really understand how important correlating the Dixie is to your trade setups. So any other questions you guys have? You know, any pairs you want us to cover, indicators you want us to cover? Like, you know, use Jamal and I to help yourself get better.
Man, I appreciate the books, dude. I'm gonna use them, and I really got to hop off this time, but I'll catch
Okay.
y'all Wednesday.
Awesome. I appreciate you, Brian. Thanks so much for hopping on the call. Enjoy the rest of your night, and have a good week.
All right, I'll see y'all next time.
Yes, sir. Take care. Anybody else? If not, I'm going to go ahead and stop recording and wrap up. I think this was a great call, covered some really good stuff in here. And, you know, if you guys have any other questions or
just put them in, tell them to just put them in the Q&A so we can do them on our, because I do want to kind of stick to our schedule for the calls.
Yeah. That's just for the people in the group already, though.
Oh, yeah. That's right. That's fair. I wasn't even thinking about that.
Yeah. So if you guys have questions or something you think of later, shoot me or Jamal a DM. You know, we'll be more than happy to answer questions and get you guys taken care of. So I appreciate everybody hopping on. I'm going to go ahead and stop recording.